Welcome back, students, to our chapter number 8. This is our series of third lecture for chapter number 8. Chapter number 8 is, as I said before, it's a long chapter. It covers many concepts related to cost and how they are going to impact the decision making process. Last time we stopped at slide number 37 on our second lecture. This was the last exercise which we have completed. So today we'll start from this slide, cost volume profit analysis. What is cost volume profit analysis? Basically, in this chapter we will look at it, that how the cost and volume and profit are changing because of certain things. What is cost here? Now in this type of analysis we look at cost either as fixed cost or a variable cost. Now volume is the number of units sold, right? If we sold 20,000 units, what will happen as an example? Or if number of units produced and sold are let's say 40,000, if you change the volume is the number of units sold, and then profit, that how the profit will change. So remember, this is all related to decision making. So in this cost volume profit analysis we assume all the cost either as a variable cost or a fixed cost. And as you know that first one, what is a profit? Right, this is an equation for profit. Right, now what is profit? Profit is revenue, total revenue minus total cost. What is total revenue? Right, it is P times X. P is the unit price at which we sell something, times X, which is a sales volume or the number of units sold. Right, so this is what we call it total revenue or total sales, minus cost. Cost has two portions. It has a variable cost and a fixed cost. Fixed cost does not depend on the number of units we sell, right? So it does not depend on the sales volume, right? It is fixed. Now variable cost, which is V, right? V times X. X is the number of units sold or the sales volume, right? So revenue minus cost is a profit. So this is what we call it a profit function, or in other words, if you put it in the form of an income statement, again it's the same thing, right? We know how we prepare our income statement, right? This is how we prepare our income statement, right? If I just want to show you, you have a sales, right, minus variable cost, so sales minus variable cost will give us our gross profit, or sometimes we call it a contribution margin. Right. This is just an income statement writing in just a different format. Sales minus variable cost equal to, right? So if you want, I can show you here. Sales less variable cost equal to contribution margin. This is how we prepare. You can put any numbers here. Sales minus variable. Then next one, after this one, we'll have our fixed cost, right? Fixed cost, and then contribution margin minus fixed cost. You get our net income or profit, whatever you say, or profit. So basically this is what we will be looking at it in terms of formula. The same thing. What is a profit? Profit is I can write it in other words. Profit is sales minus variable cost equal to contribution margin minus fixed cost is a profit, right? Or it is same thing here. What this is profit, this is sales minus variable cost minus fixed cost. In other words, it's the same thing. Now sometimes we want to know what is a break-even volume, means how much we must sell so that we just recover our cost, right? So that one basically, what is the profit? What if we have a zero profit, right? What will be a zero profit, right? When our sales equal to variable cost, and this is same thing, right? If you want this one, let me put it again in other words. What is a break even? Means that when in this equation, when our profit is zero, right? This is profit. If profit is zero, then we'll have Px equal to Vx plus F, and then we can solve it for X. Okay, so in this equation, just replace profit with 0 and solve it for X. You will get this number, F over P minus V. Okay, so what is this one? It tells us that how many units we must sell to break even. What is break even? That there is no profit, no loss. Why we need this one? Again, it is important for decision making, that before you give any target to your sales people, you should know that, okay, this is my bottom line. I don't expect anything less than this one, because after this one we will make loss. So you need to know your break even point. How to calculate a break even? It is fixed cost F over P, which is this one, selling price per unit, minus V is a variable cost per unit, right? F over P minus V, or you can call P minus V as a marginal contribution margin, right? P minus V is a marginal contribution because it is per unit cost, right? P minus V. Or you can calculate here this one, if you put total sales minus total variable cost, you get total contribution margin. This is also a same way. This one is only a unit. Now another is, sometimes we want to calculate also what is not only the unit, what is the break even sales, means how much we must sell, not in terms of a number of units but in terms of dollars, reals, right? That in that case, break even sales is F over 1 minus V over P. Basically it is derived from the same formula. If you multiply this with the P on both sides and solve it, you get it, this one. Or whatever you got X multiply by P, you can solve it. It's also same thing. If you have this XB multiply by P, you can also get a break even sales, right? This is also same thing. Okay, we will solve more on some practices for these formulas, right? This one and this one. First question, that the Martin company currently produces and sells 40,000 units of product at a selling price of $12. The product variable has a variable cost of 6 per unit and a fixed cost of 150. The company currently earns a total contribution margin. So now what we need is total contribution margin here up to here in this question. Let's say what is total. Now what is our sales? We can calculate. What is our sales? Total sales. Can you calculate what are the total sales? 40,000 units and 12 is the selling price, means 40,000 times 12, right? This is total sales. So this question will say 40,000 times 12. This is how you get your total sales. Then we get our variable cost. What will be the variable cost? variable cost here is the product has a variable cost of 6 per unit. Now 6 per unit, so what is total variable cost? Per unit is 6. So how we will solve it? How many units we sold? 40,000 times 6. This is how you get your variable cost, right? So sales minus variable cost, you get your total contribution margin. Right. So company current, this was the question here. What is fixed cost? Is 150. Okay, we don't need it because here we only need contribution margin from this equation. So multiply this, right, with this one, you get your total contribution margin. You can solve it, check your answer from here. For first one. For second one, these questions are not in your book, so we have limited questions, so I just put these extra questions for your practice. Now this one, Jarvis company produces a product that has a selling price of $20. It is $20 and a variable cost of 15, right? So 20 and variable cost, this is P, this is V. The company fixed cost F is given. What is the break-even point measured in sales and dollars? What is the break-even point in sale measured in sales dollars, right? So what is the break-even point? This formula, right? If we replace from here x, this one from here, x equal to x break F over P minus V. So x is given, x we need to find. F is this one, 50,000 F divided by P minus V. You get this answer. This is your break-even units. Let me show you. I'll use a calculator. Yes. Now x over P minus V. What is x here? X is F over P minus V. F is 50,000. Our 20 minus 50,000 divided by 20 P minus V, right? P is 20 and it is 20 minus 15 is, so divided by 5, it is 10,000. Now what is this one? This 10,000 is 10,000 is using this formula. It is break even volume, means the number of units we must sell to break even. But the question here is not the number of units. See, break even point in sales dollars, not the number of units, sorry, in sales dollars. If you know that it is 10,000, so multiply by 20p, right, using same formula, right? This one here, in terms of p times this xb, which you calculated already. P is 20, this xb is we just calculated here. So this one 10,000 multiply by 20, so 200,000 is the break even point here. 200,000. This is the answer. Again, you can solve it, have your practice. Next one is break even point is 12,000 units. Product sells for 25 and 10 is variable cost. What is fixed cost? So F is unknown from this formula. Just use this formula and calculate F. X break even point, this is given. This is unknown. P and V are given in next question, so you can solve it easily. I'm not solving, you can just practice. Now this one, at its 60 selling price, Atlantic company has sales of 15,000. Now see, what is this one? It is sales, means total sales, P times X, this is given, this whole multiply whatever this sales is given, right? 15,000. Variable manufacturing costs of 4,000. So again, variable costs is given, not V. V times X means this whole number is given, right? Variable costs is given. Fixed manufacturing cost is given. Variable selling and administrative costs. Now they have another type of variable cost, 2,000, and another fixed cost. So they have 2V and 2F only. This is the difference, right? What is the company's contribution margin per unit? Yes, can you solve it? So what we have it here, 60 selling price, and it is total sales. Now the question here is, what is contribution margin? What is the contribution margin per unit? If you know this one, P minus V. If you know P and if you know V, simply P minus V is a contribution margin per unit. This is a very simple way. From this information, we can look at it. Can we find out the P? What is P? This 60 is a P, right? P selling price is 60, right? So P is there. Let's see V. V is not given. What we have is two variable costs, right? Which is 4,000 and this one 6,000. So if we divide 6,000 by number of units sold, we can easily find out. But what is the number of units sold? We don't know. But what we know is this one, 60 times, if I go back, for example, if you look at a sales, right, this is not given as an example, right? I'll just remove something, right? Right, number of unit times 15, right? 60 times X is 15,000. Right, so this times 60, which is P, equal to 15,000. Now this is what given. So we can find number of units sold from here, right? How? 15,000 divided by 60. So I'll go back. So 15,000 divided by 60. So 250 units. So basically they sold 250 units. So now we have the number of unit is 250, right? Here, basically this was unknown before, so it is 250. So now this one is the number of units sold. Now in this question, coming back here, we have to calculate contribution margin. P is we already know P. So now what we need to calculate now is V, variable cost for 1 unit. What is a variable cost, right? So we have variable manufacturing cost 4,000 and then variable selling. So you have two types, V1 and V2, which is 4 plus 2, 6,000. So 6,000 divided by 250, we can get V. 6,000 divided by 250. This is our V. And what is P? Already we know 60, right? 60 minus 24 is 36. This is the answer. This is how you get it. So maybe some fixed cost is given, but we don't need it. So be careful how to solve these questions, right? It's not difficult, only you need to use these formulas, right? Using this formula, right? Or using this, it is the same thing, right? How we calculate sales minus variable cost equal to contribution margin minus fixed cost equal to net income or profit, or using this equation in case you want to find X or P or F, whatever. Now next question, M&M produces a product has a variable cost of 3 per unit, so V is given, right? Company's fixed cost F is there, product is sold for 5 per unit, so product is sold for 5 per unit, which is P, and the company desired to earn a target profit of 20,000. Now see, this is another scenario in decision making process. Now let's say management want to have something in the mind, a target profit. So if they want to achieve a target profit of 20,000, what should be the sales, right, to earn this target profit, right? So what is the total amount of sales? Means here, coming back to this one, right? Let's say what should be the sales if we want to earn a target profit, or in this equation profit should be, you can just replace a profit with 20,000, right? So what if we have a profit of 20,000, right? Or you can replace in this equation, sorry, just what happened in this two. Yes. And just some settings. Yes, coming back to our question, sometimes we need to earn a target profit and we want to know what is our sales. So this was the question basically here. Now if you want to earn a target profit of 20,000, what should be the sales? Basically it's easy, not difficult, right? Only what you need to do is you need to replace in this equation those numbers, right? Let's say if I want to put it here, let's say profit is in this equation. What is profit? Profit is I'll put it here again. Profit is 20,000. If you want to earn a target profit of 20,000, so I'll say 20,000, right, equal to P times X, right? We want to know first, let's say what is the x-axis, how many units we must sell in order to earn this profit, right? So what is X? We don't know. This is X, right? What is P? The unit selling price, right? P times X. What is P? From here we can find is this one, 5 per unit, right? So it is 5x, right? 5x, right? Px 5x minus Vx. What is B? Again you need to look at it here. What is V? Variable cost is 3, so 3x minus 3x minus if I want to open this equation, same thing, minus F, which is fixed cost. What is fixed cost? We can find out from here. Fixed cost is 30,000. It is 30,000 is F. So now we can solve it for X. Right, so you'll get a number of from this one. We can solve it for X, right? X will be, if I have to solve it, X is going to be how much? So it is, I'll keep it on this one on this side. So 2x equal to 20 plus 30, 50,000. 50,000 divided by 2. So it is going to be 25,000 is X. Now how much is in terms of sales? What is the selling price? Because the question says, now if we sell 25,000 units, we get this profit, 20,000. This is in terms of dollars, right? So if we sell 25,000 units, we will get a profit of 20,000, right? So this is our sales. Sorry, the number of units which we need to sell, right? 25,000 units to, I can write it in other way, 25,000 units to get profit of 20,000. So if you want to get a profit of $20,000, this is what you must sell. Let's see what is the question says. Question says, what is the amount of sales that will be necessary to earn this profit? What is the amount of sales? How we calculate amount of sales? Total sales. Can you tell me how to calculate? So required sales, or we call it a target sales, right? So what will be the target sales? How many units we are going to sell is 25,000 multiply by, what is the unit price for one? It is 5. P is 5, given this one, px, right? So times 5. So if you multiply this, you will get $125,000. So again, if you want to get a profit of 20,000, you must sell, this is your sales dollar. In terms of number of units, if the question says what are the number of units to be sold in order to get this profit, is 25,000. But how much in terms of money, dollars, then you can say it is this one, 125,000. So this is the answer. So it all depends on the question. So try to solve these questions again and have a good practice. Next question is another practice question. Again, we have the following income statement. We call it a contribution margin format income statement, which is similar to this type of income statement, right? It is same thing here. Sales revenue, which is X times P, total variable cost X times V, contribution margin is 18,400, which is this minus this, right? Fixed expenses are 10,000 and net income is 8,400. Now the company, so this is already given, remember. The company is experimenting with the new engineering techniques and believes it can reduce variable cost to 4.50 per unit. So remember, this is all about decision making. So someone suggested that we can reduce a variable cost, right? Currently it is 6 per unit. Some engineer suggested that we can reduce this cost from 6 to 4.50, right? And it will also improve the quality of a product. The innovation would double the fixed cost, but because of this new technique, our fixed cost will be double, means instead of 10,000 it will be 20,000. But the company expects to be able to increase sales to 3,500 units. So now this, because of high quality of a product, now instead of selling 2,300 we can sell 3,500 units. Now if this strategy is pursued, means if the company follow this strategy, what will be their budgeted income? Means you have to do all this again, very simple, right? So what will be sales? You need to do it by yourself. I'm not solving it here. What will be your total sales? Will be 3,500 multiplied by 14. This is not changing, right? 3,500 from here, new sales number times 14. Variable cost 3,500 multiplied by this new number 4.50, right? And contribution margin, new one. Fixed cost, instead of 10 it will be 20. And then what will be, the question says what will happen to net income? You will get a new net income. The question is change from this and the new number here, you get it here. So is it increase or decrease? You should get this answer, that our income is increased by this one. Basically this number should be more, the new number more than this, and then calculate a difference. You will see that there is an increase in the net income. So I'm going to stop here and I'll upload and continue the next after a few minutes. But this is very important questions. You need to practice and solve them. Not difficult, easy. Have a practice. Please have a practice. Very important. This is what I'm saying again and again. Repeat these questions again. It will be easy. But without practice, it will be difficult. Thank you very much.